buy it to flip and you make 60 grand, but you spent 5 months to do it. And then you have to pay taxes. It's called capital gains. So you really didn't make any money, right? When you look at the risk.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thanks again for joining another episode of the Freedom Point. I am your host, Jeremy Dyer. Today I have a wonderful guest with me, Walter Johnson. Walter, welcome to the show.
Thank you. I appreciate it. Absolutely. Glad to be here.
Of course. And thanks you for your time this morning. Quick little bio on Walter. He is a renowned entrepreneur, real estate investor, and keynote speaker. Walter founded Sonos Capital, which is a real estate investment firm that provides opportunities for individuals to invest in mobile home parks across the country. Walter, tell us a little bit more about yourself, maybe your background, your story, what you're currently focused on, et cetera.
Yeah, absolutely. So I started in 2002, moved out here from Southern California, and looked at the newspaper and seen how homes were actually cheaper in Arizona than Southern California. So I bought my first investment property about 2002, bought my first apartment building while I was actually living in an apartment building as well in 2003. And by the time I would say about 25, I had about, I think, 22 single family homes, or 23, including my primary residence. And I came to the conclusion that this wasn't the best investment strategy to owning a whole bunch of single family homes. So I took some time off and kind of reevaluated my investment strategy and sold my last apartment building, I would say in 2016, and then purchased my mobile home park a couple of years later. My first mobile home park, let's just say. And that's how I got started. Yes.
So interesting. So 2002, you bought a multifamily apartment, and also during that time period, you had acquired 22, 23 single family homes. You were definitely on the active side of real estate ownership, correct?
Yes. So I was actually working at a full-time job as a mortgage broker. And so it allowed me to, if I seen a deal, allowed me to leave the office and go look at it in the middle of the daytime. So I actually had that opportunity to do so, to scale. But when I was, I would say 25, 26 years old, I think my net worth was about a couple $1 million. But I realized that this wasn't ideal investing because I had so many single family homes across the the city, whether I had them in Phoenix or Scottsdale or Mesa or Gilbert. It was just it felt like a job in itself. And I did a couple flips. I didn't like flips. I think doing flips is probably the lowest barrier of entry in real estate. And in my opinion and experience, you're buying a job. So, you buy a home or you buy it to flip and you make 60 grand, but you spent 5 months to do it. And then you have to pay taxes. It's called capital gains. So you really didn't make any money, right? When you look at the risk. So I preferred multifamily, but my section is mobile home parks.
Yeah, it's interesting that you bring up that point. Much of my audience is familiar with the fact that I used to be an active fix and flipper, and I calculated my hourly rate on one of those fix and flips, and it was $15 an hour.
Yeah, okay. Sounds about right.
Yeah. And I mean, at that point in time, it was kind of another one of those aha moments where maybe I should just focus on continuing to crush my day job and max out my W-2, versus, trying to, make 20, 30, 40, 50 grand on a flip, where after the amount of time, effort, and energy that I put into it, my hourly rate, is $15 an hour. So.
Yeah, no, absolutely. I mean, it sounds great. It looks attractive. it sounds great at a cocktail party, but when you pencil it out, it doesn't make any sense.
Yeah, absolutely. And I guess back in our 20s, we were interested in impressing people at cocktail hours. But when you
Yes,
get to your 40s and 50s and beyond, you certainly care a lot less about that. So um,
absolutely.
let's talk about, maybe the big elephant in the room from back in kind of the, 2002 to 2010 range. We had a pretty significant, event occur in the real estate market, back in '07, '08, '09. So do you want to maybe share with us a little bit about, how you kind of fared, during the global financial crisis?
Sure, sure, sure. So and there was an epiphany that happened after that, but I lost a ton of money. I think it was, with equity in my homes, I think I was losing about 250 grand a month. But there was nothing I can actually do because it was, the Great Recession. So my epiphany is that with the single family homes, if people were short selling or they were getting foreclosed on, when I looked at it, it says, what does that have to do with my property if I'm keeping it up? So that's why I actually like multifamily, because I would say it's uh, it's its own kind of bubble. The next property over doesn't affect the value of your property per se. Yeah, so that's actually what I learned in the '08 recession. Absolutely. And also in the '08 recession is that, is that I'll give an analogy. When clothes are on sale, let's say at Macy's or Neiman Marcus, there's are some electronics at Best Buy. There's a rush to actually buy those electronics. But when there's a sale in real estate called a recession, people actually run from it. And so one of the keys that I learned in that time is actually when there is a recession, buy.
Yeah. I have
Yeah.
a friend of mine who went on a buying spree in 2008, 2009 in the Twin Cities in Minnesota, acquiring dozens of single family home properties when everybody else was running the other direction. And that set himself up financially incredibly well. Now he's to the point where he wants to, exit out of those single family rental homes and, instead deploy that capital into multifamily properties, and has even, gotten to the point in his life journey where he's wanting to be more of a passive investor, and then on the active side, because he's built up, enough equity and receives enough distributions and equity profit split, on those investments, to where he's no longer, needed to actively manage those properties. So it sounds to me like you also kind of got to that point in your journey, and you're now more seeking, the cash flow side of it. So where does the decision come into, start investing into mobile home parks specifically, and why is that specific asset class, do you believe, one that investors ought to consider?
Well, it's a fragmented industry. That's the reality of it. So it's a lot of inefficiencies. So when you actually have a lot of inefficiencies in real estate, it allows you to actually take advantage of of that opportunity. When you look at mobile home parks and you have an owner, I think average owner is about 72, 74 years old, and they usually write down the rent rolls on a piece of paper versus having software like multifamily, single family. It allows you to, and they don't keep up on rents. They give a lot of people breaks. I get it. We're all human. However, we do. It is a business, and we actually have to operate a business. But when you look at the fragmentation of the industry, it allows for investors to actually come in and streamline operations, increase rents to market, decrease expenses, and turn the park around, fill it up with new or used homes, and aesthetically make it attractive. So our thing with me and our investors, we actually are looking to as a whole get rid of the stigma of mobile home parks or trailer trash. That's in my experience. That's the tenants that live there. That's so far from the truth as far as the stigma.
Yeah, I mean, I think I've been through many mobile home parks in my days, and some of them are just absolutely beautiful communities. Tenants, you know, are all doing well for themselves, and it seems like a very enjoyable community. for people, even young families to raise their families. So I would agree with you on the stigma. And obviously kudos to, you and what you guys are doing. And, really, I guess the strategy is to reposition these assets to maybe buy mobile home park communities from your traditional mom and pop seller, provide some value to the tenants, obviously, from an ROI perspective, increase the ROI through increased rents, maybe decrease the deferred maintenance. Is that kind of the overall strategy?
Yeah, absolutely. And once we do that, we actually increase the value significantly. I would say that's very difficult to do in single family homes. So let's say, for example, you have a 50 space park and you raise the rents, $50 over the next, let's say 3 or 4 years. We just created $1 million in equity. That's really difficult to do in single family homes.
Yeah.
So that's actually, one of the benefits of mobile home parks.
So are there, I know a lot of investors, the reason why they invest into real estate on the passive side is because they like the depreciation, benefits. Are there depreciation benefits to investors that invest in mobile home park communities?
Yeah, oh yeah, absolutely. So when you look at depreciation for mobile home parks, it's actually over 15 years versus I think it's like 27 and a half years for single family homes. And when you add that, the bonus depreciation or Section 179, it gets passed through to our investors. So they definitely save money on their taxes. Yes.
Okay.
And with parks, usually, you have depreciation when you buy it, because usually you have park owned homes. But when you actually bring in new homes, you have that bonus depreciation as well. And so let's say you bring in 10 new homes that year. Well, that's X amount of, bonus depreciation that year. Then you bring in 10 more homes the next year. That's another bonus depreciation year. So it definitely adds up and decreases our investors' taxes.
Yeah, that makes sense. Now, I know that you're a big proponent of focusing when it comes to investing, focusing on the cash flow over the appreciation. I think all investors would say, well, I want both, right? But why the maybe a greater emphasis on the cash flow over the appreciation?
Well, that's one thing. Once we buy parks and they cash flow from day one. So if nothing actually ever changes in the park, it actually still cash flow. I would say a minimum about 10% cash on cash return. I would say about 10, 12%. But when you actually raise rents and decrease expenses, automatically you actually add value to that mobile home park and it actually increases in value. But when we go in, we actually look at the cash flow. Yes.
Okay. In your opinion, from a greater real estate investing perspective, would you say that now in this point in time, we're recording this podcast towards the end of January in 2024, is now a good time to invest in real estate?
Yes, I would say 100% it is. If you look at what's happening in single family homes and apartment buildings, you actually have these big REITs, these big companies, Blackstone, BlackRock. They're actually buying, build to rent communities, and mobile home parks actually haven't been touched as of yet. So I would say now is the time. If you know people in the industry, reach out to them to see how you can actually get into mobile home park investments, or reach out to me as well. But I think in the next 5 or 10 years, the average investor actually investing in mobile home parks would think themselves that they invested today.
Now, I don't have a crystal ball, neither do you, but I've heard, the headline news from the experts suggesting that there may be some relief coming on the debt side. I've heard some rumors that the Federal Reserve, might, intend to lower, the federal funds rate or SOFR rate, a couple of times in 2024. We don't know whether or not that's going to happen or not, but, why would you say now is a good time to invest specifically in mobile home parks before the Fed potentially lowers interest rates?
Well, when the Fed, if we actually look at what happened in, let's say, right COVID and then right before COVID. So the actual the Fed lowered the rates. Money, what happens? Money got cheap. When money got cheap, the prices went up. And now when, I think the Fed rate is 5.25, 5.5. When that actually starts dropping towards 4, 4.5, 3, money's going to get cheap and real estate is actually going to go up again. That's just what happens. And if you can even track it back I would say to about 1958, the Feds is right around about 5.25, 5.5. Then they actually start lowering rates, and it spurs the economy. It kickstarts the economy. So I would say now is the best time. Yes.
Somebody that's unfamiliar with the strategy of investing in mobile home park opportunities, and they're interested in learning more, where would you recommend they go to get started?
Well, they can actually reach out to me. I'd be more than happy to help them and educate them as well based on my knowledge. There's not a lot of information online with mobile home parks. Like I mentioned before, it's a fragment industry, and so it's mom and pops, and the average person is, average owner is about mid 70s, and that average owner is not going on the internet and telling their secrets or what they know, right? So, uh, it's if you have anyone that I would personally, to your audience, I would definitely reach out to them, reach out to me and get more information.
How does Walter use his talents to give back?
Oh, in mobile home parks. So I'm a board member of Manufactured Housing Association of Arizona. I'm a board member of the city of Mesa. They have a affordable housing division, and in that division, it's manufactured housing. So I'm a board member of that. I'm a keynote speaker. I do 2 keynotes in June, and then I signed up, and I'm actually going to be a keynote speaker next month as well. So that's one way I give back. Another way I give back as well is that when you actually have a mobile home community, you sponsor the local baseball team, or you give away jerseys to the basketball team, or you sponsor something at a fair. So I've done a county fair. So I've done all those things that actually help and kind of inject my support in that community.
Yeah, sounds to me like you're using your talents really to give back to people by them using your time, which is excellent. Would you care to let our listening audience know a little bit more about the types of speaking engagements that you're involved with coming up here this summer?
Yeah, so I actually have an RV keynote speaker for what's happened, previously in the RV industry and what we look forward to in the upcoming years. So that's one day, and then the next day is actually manufactured housing. I actually have a board meeting on the February 1st, to actually speak about mobile home parks as well. And then I have something, I don't know the date off the top of my head, but that's actually based on multifamily in mobile home park space. So yes.
Sure. What's next for Walter, either personally or professionally?
The goal is to buy 1,100 spaces per year, I guess, till the day I die. I like what I do. It's fun. I like helping people, whether it's our investors or bringing in new homes for tenants. To see their smile and to see them be actually grateful and thankful to have a good, clean, quality home is priceless. And I think if anyone actually experienced that, they would do it just like I'm doing it now.
Yeah, absolutely. It's an interesting way to obviously give back. You're giving back, obviously, your time, but you're also giving back in the sense that you're, really breathing, some maybe life into those communities, and those tenants, and creating a much better, living condition, for them as well, which is greatly needed, not just within workforce housing, but also affordable housing, across the country. So kudos to you for doing that.
Yeah, thank you. I mean, when you see, let's say a gentleman has his job and he's 25 or 26 and he's has a girlfriend and it's like I'm going to propose to her. And she's pregnant and he can actually buy their starter home. Now, of course, a starter home now is about $400,000. But when you can buy a nice starter home for about 60 grand in a mobile home park, and he can give her the keys and saying this is our home. I think that's just that's just a good part of life to actually see.
Yeah, absolutely. Is there a particular book recommendation that you'd have for the listening audience, whether it's in a real estate book or non-real estate book?
No, I don't. That's a good question. I read a lot. Friday nights I'm reading all the time. I think I have about 13 or 1,400 books. So I think I'm definitely an avid reader. But I would say experience is your best teacher. I couldn't point out a real estate book, and I've been buying them since I would say late 90s or so, that would actually turn on a light bulb and say, that's the book that helped me out in mobile home parks. I don't have that. I don't have that recommendation right now.
Sure. What would be a couple of different ways that our listening audience could connect with you to learn more about what you're up to?
Sure. They can give me a call. Give me a call at my office, 480-674-2035, or Walter at Sonos Capital, and I'd be more than happy to actually help them out. But yeah, this is actually a great investment. It's investing, but you're injecting humanity into what you're doing, and I think that's the best of both worlds.
Yeah. Well, great. Well, Walter, I've really appreciated you being on the show with us today.
Thank you. Yeah, absolutely. I enjoyed it as well. Yeah.
Good. And listening audience, thank you again for joining us on another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.